Assalamualaikum warahmatullahi wabarakatuh. Hello everyone. We are from group 2 of Auditing 2 class. We are here to present our material about completion of sales and receipt cycles test of account receivable. First of all, I need to introduce you to my group members. First, we have Bunga Adinda Putri, and then we have me, Sini Nabila Andri, and we also have Gina Maria Harun. Okay, the first and second part will be presented by Gina.
Okay, thank you, Cindy. I will present the first part about the methodology for designing test of details of balance using the audit risk model. Next. The appropriate evidence to be obtained from tests of details of balance must be decided on an objective by objective basis. Because several interactions affect the need for evidence from tests of detail of balance. This audit decision can be complex. In designing tests of details of balance for accounts receivable, auditor must satisfy each of the 8 balance-related audit objectives first. Specifically applied to accounts receivable, they are called accounts receivable balance-related audit objectives. Next. These are 8 of account receivable balance-related audit objectives. First, account receivable in the H trial balance agree with the related master file amounts, and the total is correctly added and agrees with the general ledger. It calls detail tie-in. The second one, recorded accounts receivable exists. We call it existent. The third one, existing account receivable are included, or completeness. Fourth, accounts receivable are accurate, or accuracy. Fifth, account receivable are correctly classified, or classification. Sixth, cutoff for accounts receivable is correct, or cut off. 7, accounts receivable are stated at realizable value. All we point it as realizable value. And the last, the client has raised the accounts receivable. We point it as right. Next. Okay, the method for designing tests of details of balance for accounts receivable has 3 phases. For the phase 1, we have identified significant risk and essence risk of material misstatement for accounts receivable. And next, the set for performance materiality for account receivable. And last on the phase 1 is assess control risk for sales and collection cycle. For the phase 2, we have design and perform tests, controls, and substantive tests of transaction for sale and collection cycle. And the phase 3, we have design and perform substantive analytical procedures for accounts receivable balance, and design tests of details of account receivable balance to satisfy balance audit objectives, audit procedures, sample size, item to select, and timing. Next. Next part is part 2, design and perform substantive analytical procedures for accounts in the sales and collection cycle. Next. This part will start with the table 1 about analytical procedures for the sales and collection cycle. In the first column, we have analytical procedure, and the second column, possible misstatement of the analytical procedure. For the first row, we have compared gross margin percentage with previous years with the possible misstatement, overstatement, or understatement of sales and account receivable. Next, compare sale by month, by product line over time. The misstatement possibility is overstatement or understatement of sale and account receivable. And next, compare sales returns in an allowance as a percentage of gross sale with previous years. By product line, with the possible misstatement is overstatement or understatement of sales returns and allowance and account receivable. Next. The next part is compare individual customer balances over a state amount with a previous year with the possibility of a misstatement is misstatement in account receivable and related income statement accounts. Next is compare bad debt expense as a percentage of gross sale with previous years. With the possibility is uncollectible accounts receivable that have not been provided for. And then compare the number of days that accounts receivable are outstanding with previous years and related turnover of accounts receivable. With the possibility of misstatement is overstatement or understatement of allowance for uncollectible accounts, and bad debt expense also may indicate fictitious accounts receivable. The next is compare aging categories as percentage of accounts receivable with previous year. With the possibility is overstatement, understatement of allowance for uncollectible accounts and bad debt expense. The next part is compare allowance for uncollectible accounts as percentage of accounts receivable with previous year. With the possibilities is the same with the previous row. And next is compare write-off of uncollectible accounts as a percentage of total accounts receivable with previous years, with the possibility of misstatement, same as a row before. Next. Okay, to illustrate the use of substantive analytical procedures during the detailed testing phase, Table 2 presents comparative trial balance information for the sale and collection cycle information for Hillsborough Hardware Company. Building on that information, Table 3 demonstrates several substantive analytical procedures. The only potential misstatement indicated in these two tables is an allowance for uncollectible accounts. This is indicated by the ratio of the allowance to accounts receivable, as explained at the bottom of table 3. This is table 2 about comparative information for Hillsborough Hardware Company about sales and collection cycle. We have amount from 2014 until 2016 with the percentage change of each years in different accounts like sales, sales returns, and allowance, gross margin, accounts receivable, and allowance for uncollectible accounts. Next. Next account is bad debt expense, total current asset, and net earning before taxes, number of accounts receivable, and number of accounts receivable with balance over $100,000. Next. This is table 3 about substantive analytical procedure for Hillsborough Hardware Company of sales and collection cycle. This is compared with year by year about the percentage from 2014 and 2016 about the gross margin net sales, sales returns and allowance or gross sale, bad debt expense or net sales, allowance for uncollectible accounts or accounts receivable, number of days receivable outstanding, and net accounts receivable or total current assets. For the adding information about the number of days of receivable outstanding is based on year-end accounts receivable only. Allowance as percentage of accounts receivable has declined from 6.4% to 6.1%. Number of days receivable outstanding and economic condition do not justify this change. Potential misstatement is approximately about $60,000. It comes from to $20,197,000 multiply with the percentage of 0.064 minus 0.061. Next. This is the additional information about the phase 3 about the design and perform test of details of accounts receivable of balance. The approximate test of details of balance depend on the factor list in the evidence planning worksheet. The task of combining the factors that determine plan detection risk is complex because the measurement of each factor is imprecise and the appropriate weight given to each factor highly subjective. Conversely, the relationship between each factor and plan detection risk is well established. That's all my part. And we give it back to the Cindy.
Okay, next up we have part 3 and 4 that will be presented by Bunga Adinda.
Okay, thank you, Cindy. So the part 3 is about test of details of balance for account receivable. So in designing test of details of balance for account receivable, the balance related audit objective must be satisfied. The first one is detail tie-in. For account receivable involves 6 steps. The first one is identify client business affecting accounting receivable by the first one is understanding client's business and industry. It means studying client industry and external environment and evaluating management objective and business process to identify business risks that could affect account receivable. And then performing preliminary analytical procedure. And the second one is set performance materiality and assess inherent risk. So we decide the overall materiality for the entire set performance materiality to each significant balance sheet account, including account receivable. And then assess inherent risk for each objective for an account, such as account receivable, considering client business risk and nature of the client and industry of bias. For example, is there a possibility of fraud in recognition of revenue, misstating cutoff, or allowance for uncollectible accounts? And then the third step is assess control risk for the sales and collection cycle. Auditors are concerned with 3 aspects of internal control. The first one is controls that prevent or detect embezzlement. The second one is controls over cutoff, and the last one is controls related to the allowance for uncollectible accounts. And the auditor must relate control risk for transaction related audit objective to balance objective in deciding planned detection risk and planned evidence for test of details of balance. The fourth step is design and perform tests of controls and substantive tests of transaction. The result of tests of controls determine whether assess control risk for sales and cash receipt needs to be revised. Auditors use the result of substantive tests of transaction to determine the extent to which plan detection risk is satisfied for each of account receivable balance related to audit objective. And then the fifth steps is design and perform analytical procedures. Remember, analytical procedures are done during 3 phases of audit. The first one is during planning, and then when performing detailed tests, and then the last one is as part of completing the audit. The fourth is confirmation of account receivable. Confirmation of account receivable, its primary purpose is to satisfy the existence, accuracy, and cutoff objective. It should be done in normal circumstances, except where the auditors considers confirmation ineffective evidence because response rates will likely be inadequate or unreliable. And then the combined level of inherent risk and control risk is low, and other substantive evidence can be accumulated to provide sufficient evidence. And then if the auditor decides not to confirm account receivable, the justification of doing so must be documented in the audit files. Confirmation process. The first one is decided the type of confirmation to use. There are two types of confirmation. The first one is positive confirmation and the negative confirmation. So the positive confirmation is a letter addressed to the debtor requesting that the recipient indicate directly on the letter whether the state account balance is correct or incorrect, and if incorrect, by what amount. And the negative confirmation is a letter addressed to the debtor requesting a response only if the recipient disagrees with the amount on the stated account balance. And second one is decide on the sample of debtors to send confirmation. And then the auditor must maintain the control of confirmation until they are returned from the customer, and then follow up the non-responses. And the last one is analysis of the difference.
Okay, last but not least, I'm gonna talk about the design audit procedures for the audit of accounts receivable using an evidence planning worksheet as a guide. Okay, for this one, we use Hillsburg Hardware Corporative to illustrate the development of audit program procedures for test of details in the sales and collection cycles. The determination of this procedure is based on the test of controls as substantive test of transactions. First up, we have the evidence planning worksheet to decide test of details balance for Hillsburg Hardware Company Corporation's accounts receivable. And then we have acceptable audit risk, inherent risk, control risk sales, control risk cash receipts, control risk additional control, substantive test of transactions or sales, substantive test of transaction cash receipts, substantive analytical procedures, plan detection risk for test of details of balance, plan audit evidence for test of details of balance. It has a difference of levels here. For examples, in the detail tie-in on acceptable audit rate, it is medium. On inherent risk, it's low, and on control risk sales, it's also low. Control risk cash receipts also low, and so on, as you can see on this table. Next. Okay, this is the balance-related audit objective and audit program for Hillsburg Hardware Corporation sales and collection cycle for it in form of design format. For the balance-related, we have the balance-related audit objective and the audit procedures. First is the account receivable in the age trial balance, agree with related master file amount, and the total Okay, so for the second audit procedure is to confirm accounts receivable using positive confirmations and confirm all amounts over $100,000 and a statistical sample of the remainder. Then perform alternative procedures for all confirmations not returned on the first or second request, and then review accounts receivable trial balance for large and unusual receivables. The third, we have For completeness, it is existing account receivable are included in the age trial balance. The audit procedure is trace 5 accounts from the accounts receivable master files to the age trial balance. For the accuracy, we have accounts is the accounts receivable in the trial balance are accurate. The audit procedures, we have 3 here. It is confirm account receivable using positive confirmations, confirm all amounts over $100,000, and a statistical sample for the remainder, and then perform alternative procedure for all confirmation not returned on the first or second request, and then review accounts receivable trial balance for large and unusual receivables. For the classification, we did account receivable on the each trial balance are correctly classified. Audit procedure is review the receivable list on the each trial balance for notes and related party receivables. Inquire of management whether there are any related party notes or long-term receivables included in the trial balance. And then the transaction in the sales in collection cycle are recorded in the proper period or cut off. The audit procedures is select the last 20 sales transaction from the current year's sales journal and the first 20 from the subsequent years and trace each to the related shipping documents, checking for the date of actual shipment and the correct recording. And then we review large sales return and allowance before and after the balance sheet date to determine whether they are recorded in the correct period. And then for the realizable value objective, account receivable is stated at a realizable value. The audit procedure is trace an account from the age trial balance to the accounts receivable master files to test for correctness of aging and the balance. And then use audit software to foot and cross-foot the age trial balance and discuss with the credit manager the likelihood of collecting older account, examine subsequent cash receipts and the credit file on all account over 90 days and evaluate whether the receivables are collectible. And then we evaluate whether the allowance is adequate after performing other audit procedures for collectively of receivables. And for the rights objective, the client has rights to accounts receivable on the trial balance. The procedure is we review the minutes of the board of directors meeting for any indication of pledge or factored accounts receivable. And then we inquire of management whether any receivables are pledged or factored. Can you go please to the previous slide, please? Okay, now we to simplify all of that, this is a test of detail of balance on audit program for Hillsburg Hardware Corporation sales and collection cycle in the performance forward. There are 15 in total. The 15 total procedures, which is the one that I already mentioned. The first is obtain the accounts receivable age trial balance and trace the balance to the general ledger. Second, use audit software to foot and cross-foot the age trial balance. Third, review age trial balance for large and unusual receivables. 4, calculate analytical procedures indicated in carry forward audit schedules, which is not included, and follow up on any significant changes from prior years. 5th, review the receivable list on the age trial balance for notes and related party receivables. 6, inquire of management whether there are any related party notes or long-term receivables, including in the trial balance. 7, review the minutes of the board of directors meeting and inquire of management to determine whether any receivable are pledged or factored. 8, trace 10 accounts from the each trial balance to the accounts receivable master files to test for the correctness of aging and the balance. 9, trace 5 accounts from the accounts receivable master file to the age trial balance. 10, confirm Accounts receivable using positive confirmations confirms all amount over $100,000 and select a statistical sample using audit software for the remaining account. 11. Perform alternative procedure for all confirmations not returned on the first or second request. 12. Discuss with the credit manager the likelihood of collecting all their accounts, examine subsequent cash receipts and credit file on all larger accounts over 90 days and evaluate whether the receivables are collected. 13. Evaluate whether all the allowance is adequate after performing other audit procedures for collectibility of receivables. 14. Select the last 20 sales transaction from the current year's sales journal and the first 20 from the subsequent years and trace each to the related shipping documents, checking for the date of actual shipment and the correct recording. And 15, we review large sales return and allowance before and after the balance sheet's date to determine whether they are recorded in the correct period. Next. And that is actually the end of our group presentation. I hope you, whoever watched this, find it helpful to help understand the material more. You guys can ask our group if you guys have any question in the class. And I'm sorry if we made a mistake here and there. That is the end. Assalamualaikum warahmatullahi wabarakatuh.